So good morning, everyone. Welcome to the first edition of the high-end real estate webinar by Eyebrow Living. Okay, sorry, I'm seeing someone here. Yes. Okay. Yes. So welcome everybody. We'll be starting now. Today we'll be speaking about the hello. So is it clear? Karina, please give us some time. So I think everybody should drop their their questions in the Q&A box. Everybody will be attended to before the end of the webinar. So like I said, we'll be assessing the demand for luxury real estate in Lagos today. And this is a data-driven analysis of the supply of luxury apartments in Lagos. And we're going to be referring to two different reports today, one by Estate Intel on the supply into the market, and another one by Enlia Partners on the wealth distribution in Africa, basically based on the Africa Wealth Report. So we have five today. We have Mr. Dolapo Omidire, the CEO of Intel, Chidima Kibala, we have Mr. Leia Taiwo, the CEO of yes, Dolapo Omidire of Intel, will be telling us. Sorry about that, my network had issues. So Mr. Dolapo will be going into his presentation now. After his presentation, we'll have a presentation from Chidima. And then we'll close that session, then we'll start the panel session. So I think Mr. Dolapo can start now.
Okay, thank you very much, Ola. And thanks to the Highbrow Living team for having me. Just a quick clarification. The session in question, or the report in question, was an article that we put together. I'll have Ola circulate that in the chat so everybody can have a look. But we just put together a summary version of the document in a few slides, just so that we could talk through the talk through the article. So Ola, if you can send the link around to the participants of the session, so that if they would like to read through the article, they can do that while I speak. But I'm going to share my screen now and just walk you through a condensed version of the document. And the essence of hold on, let me go into full screen. Yes, the essence of the article is just discussing the supply that's coming on over the next 5 to 7 years, or over the next 5 years, let's say. I'm sure if you have been in Ikoyi, been in Victoria Island, been in Eco Atlantic, Banana Island, you see that there are quite a lot of luxury units under construction. It is obviously a topical issue if you are working within the real estate industry. But the major fact that we noted is that there are over 750 units with price tags of above $1 million that are currently under construction. Right now, that represents probably the largest stock of ultra luxury under construction at the same time that we've ever seen in probably the last decade or two. So it was a topic, or it is a topic that has been really topical ad estate intel, with the analysts, just trying to figure out what's happening. A few of our luxury developer clients are also trying to figure out, okay, if there are these many units coming onto the market in the next few years, how are we going to remain competitive in this high supply environment? But essentially, what we're just going to be talking through in this article, in this notes that I think Ola has sent around to the participants now, is just a summary of this, the drivers, why we believe some of the developers are doing this, and what we expect with pricing in the years to come. So before I start, this is just a summary of some of the new projects that we're seeing. The very nice ones, of course, you might have already heard of, but Quantum Luxury Towers, Metropolitan Tower, 39 Bodilon, a couple of the other projects that are listed here. They're just a few of the projects that we're seeing along the back stretch. So that's the Bodilon, Alexander, and Gerrard stretch in Ikoyi, in Banana Island, other areas in Ikoyi as well, and in Victoria Island and Eco Atlantic. So that's just to give you a sense of some of the units that are under construction and where they are. What we typically find, just to also put some category into how we're speaking about it, when you look at the luxury versus ultra luxury, with the ultra luxury segment, those are the ones that are typically priced just above $1 million. Some of the units that are currently under construction on average in this 750 space is $1 to $3 million. But we've seen that some of those units, sometimes the penthouses or the larger ones are asking about 5 to 6. We'll see how attainable that is in the future. So I'll head right into why the developers are building. And I think in the note that we put together, it's there are a number of factors that we really can't summarize in a single presentation. But one of the major things that happened was, or at least one of the major things that we've seen, was the completion of 4 Bodilon. We think that was a really important milestone for luxury property in Lagos. Now, 4 Bodilon is a fantastic property, but it of course has its shortcomings. We're not saying that that's the best property in Lagos, but we haven't seen a property so quickly become the reference for, okay, the ultra luxury, okay, go and check out 4 Bodilon. Are your units bigger than that? What do you have? Do you have better amenities? 4 Bodilon, of course, doesn't have the best portfolio of amenities, but nonetheless, it has become a very important reference when we're speaking about luxury property in Lagos. The completion of it and the fact that it was more or less sold out upon completion during COVID, 2020, 2021, I think was, as I said, an important milestone that also showed a lot of other developers with similar conceptual projects that, okay, you know what, look at how this has happened. I'm sure we can beat this. I'm sure we can put a better product onto the market. Let's go full steam ahead. 4 Bodilon, of course, has its sequel, the 39 Bodilon project, which is moving very fast as well. And they've also said they've done some really good pre-sales. But that was one of the major things that we noted. During the COVID pandemic as well, I think of all the property sectors, residential really took off much faster than all the other sectors performed during that period, and that hasn't really slowed down since then. Diaspora participation, because of the devaluation, has also fueled that energy. But I think if we're speaking about the ultra luxury space, this was a very important milestone. Now, on the second part is that the market it's not really performing as bad as most people think, right? So when people talk about luxury property in the Lagos or in Ikoyi, it's like, all those properties are vacant. They just built it, they've left it there. Just check, nobody's there. And I think that has been the case for some of the time, but it's definitely not the case all of the time. Leye and Leye from Swindon Trollope will be able to speak to you about the performance of luxury property in Victoria Island and Ikoyi. And I think there's an important distinction. The high quality properties that are built with developers with track record, they rarely see, at least right now, over the past 12 months, more or less, occupancy has been really strong. In the note that we put together, Leye noted that in those key properties, we're seeing about 97% occupancy rate. And typically, when those units are vacant, they're not off the market for about 6 to 8 weeks. They have another tenant going in. I will agree that there are a lot of low spec, high priced units. So people who just, say I have land in Ikoyi, I'm going to put together a property, and they deem it luxury just because it's in Ikoyi. They don't put, it doesn't have the amenities, it doesn't have the really large apartment sizes, it doesn't have many other things that you would require to call a property luxury, but all they have is the location. Many of those units are on the market, and they're improperly priced. So they're low spec properties with really high prices. That's one thing that's a problem. But because those properties are not truly luxury, if we're trying to evaluate the performance of that space, we can't really include that. But nonetheless, I think the market is not performing as bad as it might appear. So I think that's also a strong encourager. Now, if we look at the people who are buying, we segmented it into these three groups, and I think I don't want to. This isn't definitive. It's definitely a lot more layered. It's not this black and white. But if we try and just group it, we can say they are the local HNIs, so the high net worth individuals who are, who Chidima will actually speak on a little more when we get to the Henley and Partners report. I'll get to that as well. They're the diaspora buyers and they're the institutional investors. Now, the local HNIs, as Chidima will speak on shortly, there's a report by Henley and Partners that discusses dollar millionaires in Nigeria, across the continent, across Africa. I think, according to the report, let me just make sure I have the numbers right. Yeah, according to reports, there are about 3 billion. Sorry, there are just three Nigerians with net worth of over $1 billion. Using proxies from previous reports, we can say there are about 23 Nigerians with $100 million, 418 Nigerians with about $10 million plus, and just about 10K, just under 10K with net worth of above $1 million. Now, anytime I've shared this, everybody says, are you sure? Are you counting the politicians? Are you doing this? Are you doing that? But anyway, this is Henley and Partners has a methodology, and she's definitely going to walk us through that. But what we're just trying to do here is size the market. So if people are buying luxury apartments, how big is that market? And how many people are in that space? And if we say, if I can buy an apartment of $2 million, probably I have a net worth of 10. We don't really have a mortgage system here, so we have more cash buyers. So about that could say, if you look at the article, that's under 500 Nigerians. So it's that's one space where we're measuring some demand. But if we have 700 units under construction, are we expecting that the entire market size is going to buy a unit today? Sorry, over the next 3 years? That's unlikely. The diaspora buyer segment is also there. Of course, there are a lot of HNIs as well that might be looking to buy property back home. But what we've seen is that the biggest participation of diaspora investment is usually in that sweet spot between $40,000 and about 400, maybe 450K. And that's where there's a lot of volumes of diaspora trying to buy property. There are some people in the diaspora looking to buy in the ultra luxury space, but it's definitely not the majority. And finally, if we look at the final segment, the institutional investors, these are some of the closed pension funds who are allowed to buy direct property. The general pension funds can't access, due to regulation, they can't buy direct property, which is actual buildings. They can only invest through REITs and other funds. There are oil companies, there are corporates that also buy luxury property for use. So instead of renting, if they know that they're going to have 30 expats every year, instead of renting all of that property, they buy it and keep it for internal use. However, over the past few years, we've seen that a lot of those types of corporates are looking to reduce the size of their balance sheets by choosing to dispose of properties that are not, or any business rather, that is not in direct alliance with their core competence. So they're offloading all those assets, selling them. We saw PZ do some of that with their residential property portfolio a couple of years ago. We've seen other companies do something similar. So that's also a segment. But I think the real question we're trying to ask is this sufficient to drive the demand? And we'll also speak about how the typologies have changed, and that's also creating new demand segments. If we look at the local HNIs, for example, I think Leah, sorry, I keep referencing you, Leah, you have a lot to say. Leah and I have spoken offline, and one of the things that he had mentioned is that if you look at the size of the units that are under construction today or have been delivered recently, The ultra luxury, the really nice Cadwell or 4 body long property, 3-bed and 4-bed, they are about 600 square meters, about 600, 500. Nowadays, you're finding some units in Azuri, for example, go up to 1,000 square meters when the penthouses. So the former HNIs who wanted to be in standalone villas, they can begin to consider, oh, maybe we might be able to stay in an apartment if it's in Maisonette, if it's this large, it's something that we can consider. So there's some other local small nuances that are opening up the market. But I think the main thing is that, or the main thing we want to discuss today is this going to be big enough to drive demand consistently over the next few years, and what will happen to pricing? As you might have seen in the note that we put together, with the pricing, we're expecting some softening, of course, in 2026 and 2027 once a lot of those units are delivered. But I think let's open it up for discussion and let's hear what some of the feedback is. But yeah, I think the final note I'll just say is that in a higher supply environment, the people who are really going to be able to remain competitive are those with track record. So I think the developers who have a track record of consistency of high quality product would definitely have an edge in the market over the next few years. So very excited, very interested to see how it all plays out. But yeah, this is a summary of the article that we put together. Thank you very much.
Thank you very much, Mr. Dolapo. I'm sure everybody learned a lot from that presentation. Sorry, if you have any questions, please drop it in the chat box, please. We're not going to be taking anyone right now until after the presentations. Thank you. So we'll be going to Chidima now. She'll be giving us an idea of the wealth in Africa, in Nigeria, especially. So we'll give the floor to Chidima now to present our report. Thank you.
Thank you, Ola. Thank you so much. It's a pleasure to be here. Dolapo, I actually learned a lot in your session, because real estate is not the core of what I do, but I think it's very interesting to see how the research that we carry out outside kind of affects what's going on the inside. So it's a good cross to do things like this. It's a pleasure to be here, like I said. My name is Chidima, and I'm a senior consultant at Henley & Partners. We're the global leaders in residency and citizenship by investment. Basically what it is getting a second passport or a second residency. And we've been in this business for over 30 years. But what we've noticed is that it's not just about selling a passport or selling a residency. The company has heavily invested in research to see how they can drive business, to see where's the best place to open another office, so to say. And during the course of the research, it's been interesting to know what's going on around the world. And also it's been interesting to see how these numbers affect other industries as well. For example, real estate. But just like I said about us, we've been around for a while. We've been in Lagos for about 5 years and Abuja for about 3.5 years. And we've just helped hundreds and hundreds of families in Nigeria seek out alternate investment out of Nigeria. Okay, so for our reports, each year we conduct in-depth research and we produce a compendium of indexes, industry-related reports and books. The one I will be speaking about is the Africa Wealth Report, which we did in collaboration with New World Wealth. We also just released the Crypto Wealth Report for those of you who are interested in crypto. And then the Henley Passport Index, which is probably one of the most popular indexes we release each year, which just states how strong your passport is. And from all indications, we all know that the Nigerian passport is not that strong. We also have the Global Mobility Report, investment reports, etc. But for the purpose of this conversation, I will just be speaking mostly on the Africa Wealth Report and how it relates to Nigeria. So the Africa Wealth Report is a guide to Africa's wealth and the luxury sector. It's published annually by us, and the part in partnership with New World Wealth. That's our the intelligence firm that we collaborate to produce this. And what we just do is we just have a comprehensive review of the wealthiest countries, the wealthiest cities in Africa, and how it relates to economic mobility, wealth management, and on the investment migration sector, which is our sector. Okay, so I'll just go through some definitions of what are we talking about when I talk about the numbers. Wealth in our report, like Dolapo said, refers to an individual with liquid investable wealth, which includes listed company holdings, cash holdings, debt-free residential property holdings. So, for example, like Dolapo said, there's so many people who are undocumented. There's so many politicians that can probably show you $5 million today in cash. Now, we're not, those numbers are not on our radar, and for reasons best known to them, they don't want to declare that. So we cannot qualify you as a millionaire, centimillionaire, or a billionaire if you don't come forward to say, look, I have this kind of money. If you don't have company holdings, if you don't have debt-free residential property that is in your name, because most of these people put their properties in the name of, even if it's their PA or whatnot, right? So for the purposes of this report, because of how standardized it is, how international it is, and how I would say research-driven it is and document-driven, the definition of a millionaire is someone who has liquid investable wealth of at least $1 million or more. And it doesn't mean that your money has to be in dollars. It just means that whenever they convert it on whichever exchange rate they're working with, it should be more than $1 million. With what's been going on in Nigeria, I think a few days ago or last week, woke up to hear that Aliko Dangote is no longer the wealthiest person in Africa. And I'm pretty sure that it's because of the devaluation of the Naira. So that's why, you know, with seminars like this, there's a lot of opportunity for you to invest in another currency so that one, you can hedge your wealth, and two, you can actually grow the wealth based on that. So for centimillionaire in our report, it's an individual whose liquid investable wealth is at least $100 million or more. And then the definition of a billionaire is one that their liquid investable wealth is at least $1 billion or more. So on the chart, you would see the millionaire growth is the rise or dip of millionaires living in a country or a city over a certain period of time in terms of percentage. So from the charts that we did from the study, this is just an excerpt because I wanted to bring out Nigeria and just, you know, bring Nigeria out. So there are 8,200 millionaires in dollars in Nigeria based on our report. There are 23 centimillionaires, millionaires that have over $100 million or more, and there are only 3 billionaires in Nigeria. Now, if you look at the millionaire growth, which is over the last 10 years, the rates of millionaires have actually dropped. So we've lost about 45% of our millionaires over the past 10 years. And this is majorly due to devaluation. And most of the investments Nigerians have been making over the past have been Naira denominated. And now I think people are getting more exposed to making investments even within the country in dollar denominations, you know, for what I do, acquiring residencies and citizenships outside, which then enables you to open bank accounts, foreign bank accounts, and being able to take your money outside and do a lot more with it. But you can see that for the other three countries, there's a trend in Africa where the millionaire growth just keeps dipping. And we'll talk about a little bit of why that's happening. towards the end, but the statistics is that for the purposes of highbrow living, 8,200 people have over $1 million in Nigeria. I'm sure there's more. I'm sure there's a lot more. But yes, for what we qualify as millionaires, there are 8,200 people that have. So the methodology for how we did this research, like I said, we partnered with New World Wealth. This is the 5th year we're doing this wealth report, and they're the only known independent wealth research firm that tracks global wealth migration trends. Now, what they do is they track over 1,500 high net worth individuals in their in-house database, with a special focus on those with over $30 million in listed company holdings. So like I said before, if your company is not listed, if you're under the table, if you're just an Alaba trader, you're not on this document. And then the database just primarily focuses on founders of companies, C-suite positions, presidents, directors, and managing partners. So like I said, the key inputs to how we get this is the wealth data from the firm's in-house database, the stock market statistics in each market, the real estate statistics in each market, the household income, household savings, household debt statistics, and the tax data. And then I said earlier, if we would see any trends, if there will be any trends in growth potential over the next years. To be honest, we've seen from the last 10 years that the trajectory thus far has been negative. And it's really hit Africa really badly. But what we're seeing that is South Africa has started stabilizing and possibly going towards the right, because one, they have a new government, and the government is just making sure that there's a lot more business brought back into South Africa, and then hopefully they can grow more millionaires and billionaires in South Africa. So basically, these are my slides. Our numbers are based on data that is verifiable, and I hope that it helps everyone in determining, what to do in terms of your markets and who you should pursue. But for Lagos and Nigeria, there are people that can still afford what we're selling. Thank you, Ola.
All right, thank you so much, Chidima. I think that was very insightful for us. Yeah, so our time has been fast spent. We'll just go into the panel session right away. So for anybody that is still raising their hands, you can drop your questions in the chat box. They'll be answered before the end of the panel session. Thank you. So for the panel session now, we'll be welcoming Mr. Dolapo Omidire, the CEO of Estate Intel. Joanna Fabikun, the head of corporate communications at Econ Atlantic. Mr. Leye Taiwo, the CEO of Trollope Property Services, and Mr. Dipo Davis, the CEO and publisher at Real House Communications. Thank you, everyone. Yeah, so we'll be going into it now. And please, each panelist has just 3 minutes to answer questions because our time has really gone. Thank you. So we'll start with Mr. Leye. Mr. Leye, based on the data that has been presented, please give us your perspective on the state of demand for luxury properties in Lagos.
Okay,
Hello?
thanks, Ola. Can you hear me?
Yes.
Okay, thanks for that. I think as Dolapo stated earlier in his presentation, we focus on 3 major groups driving demand. So one, you have the HNIs, you have the institutional investors, and you have the diaspora investors. And I'll kind of try and address each one to give a sense of the dynamics happening with each of those segments. So with the HNIs, I think Dolapo touched on this a little bit. So they're experiencing a lifestyle change, moving from large detached homes to larger apartments, which had previously been in very limited supply. So if we say, look back at a decade ago, 90% of luxury residential developments that were actually designed to meet the needs of expatriates. And that was where the demand was. You had 3-bedroom apartments, typically measuring approximately 150 square meters. Now, today, that dynamic has completely changed, where 90% of these units that we see coming to the market are designed to meet the needs of HNIs as owner-occupiers, so they're now focused on developments for owner-occupiers. Now, those individual apartment sizes, we talked about 150 square meters, say, a decade ago. Today, we're seeing apartments coming out. I think there's some that are recorded as large as 2,000 square meters in some developments. So you can see there's a complete change in that sort of dynamic. So that's really driving demand from the HNIs. They now have a supply of a product that wasn't in existence 10 years ago. And there's a change in lifestyle. So that's sort of driving change from the HNI's perspective. I'll touch on the institutional investors. I believe they're now increasingly more conscious of inflation. Anyone's guess as to why. Obviously, given what we've experienced in Nigeria over the last few years, the appetite for inflation-linked income streams has grown. And real estate, as we know, is a good hedge against inflation. So this has resulted in increased market participation from institutional investors. And we expect this to continue to grow as market transparency around the sector improves with increased access to data. I will touch on diaspora investors as well. So naturally, the devaluation of the Naira has led to increased investment in real estate from these investors as their buying power increases. And it's not as though there hasn't been that interest over time. It's just that, as Dolapo explained, 40K to 400K was the sweet spot. And if you look at previous years, that $40,000 to $400,000 simply wasn't getting you as far as it's getting you today. So today, you now have maybe some diaspora investors that have been on the fence for many years thinking it's a quality thing. So I live in the developed world, I have standards, and you expect me to pay X amount for something that I think is substandard. But today, the quality of the buildings we're seeing has improved, and obviously the buying power has improved. So this, and I think in addition to this, diaspora investors are also opting to buy apartments to rent out as short lets, because that's been one of the drivers of, you have pretty decent yields on these short let apartments. So for them, they can actually see the acquisition as an investment. So you're able to buy an apartment, furnish it, have it working for you 11 months out of the year, and you're able to utilize it, have access to it, periodically when you sort of need to. So I think these are just kind of touching on where the demand is sort of coming from. Thank you.
All right. Thank you so much, Mr. Leah. You mentioned the quality of build. You mentioned a couple of other things. That's where we'll be getting our next questions from. For Joanna now, what do you think differentiates ultra luxury properties from the general luxury property? Generally, yes.
I think typically with Nigerians, they love exclusivity and they like something that they can show off with, essentially. For example, with Azuri, we're the tallest residential building in Lagos, and Nigerians love to say, look, I live in the tallest building, or it's an exclusive location, my neighbor is so-and-so. And I think these kind of basic points are real selling points for Nigerians, because Nigerians, as I always say, are very speculative investors. If they see their neighbor is building something, they want to top that and build something even better. And I think that's also why we're seeing such a rush to the supply. As Dolapo said earlier with 4 Bodilon, it really lit a fire under the other developers' asses. and now we're seeing a huge rush. But we also want to know that in a couple of years, these buildings are still going to look and function as well as they did at the beginning. And we're not just being thrown buzzwords in terms of work-life balance. Are you able to stroll to your office, or are you in a building that has high-level restaurants around that can really give you work-life balance? And a lot of luxury real estate developers are trying to offer that. But again, it's more than the buzzwords in marketing and actually the functionality of the buildings.
All right, thank you so much. Yes, so Mr. Dikbo, you've been reporting on the real estate market for the past 25 years. You have experience in both the Nigerian markets and the UK markets. Has anything like this happened before? Like there's been like oversupply, I wouldn't say an oversupply, like a massive supply of luxury apartments into the Lagos markets.
Okay, I think there's a saying that the only thing constant in life is change. And we've been writing on the real estate market since 1999. And I can just tell you that change is the constant. So if you're expecting over 750 luxury flats or ultra luxury flats to the Nigerian market, it's probably shrugging its shoulders to say, what's the big deal? If we want to look at such systemic or seismic type occurrences in the past, I can just refer you to 2010, when there was a recapitalization exercise for the banks, and basically project financing or financing for development projects basically dried up for real estate. And what the market just segued into was into joint venture type financing. And that even seemed to have spurred more development than your typical bank financing. So it was one of the things that showed how the market can shrug off, such developments which in other climes might have had serious repercussions. In 2013, 2014, thereabouts, maybe up to 2015, again, there was the worry that there were too many apartments coming onto the market. And indeed, an economist in those days used to produce a property vacancy index, which used to be quoted, at various seminars and various fora. And the expectation was that prices will fall and the market would sort of crash. And as we know, that didn't happen. Rather, the market expanded even further. My thinking would be that we're going to see some interesting financing models. Olakmo has pointed out quite clearly that we don't have mortgage facilities in Nigeria. But I think we're going to find maybe homegrown solutions to financing. We're going to see various ways in which people can get into the market and purchase these properties. Very important point Leah also said is that the market, though the numbers are a lot more, the buying habits, the property purchasing habits of the people, the HNIs, has changed significantly. So before, the expectation was that you would live in a house if you were an MD or quote unquote a big man. But now, increasingly, we are seeing people very happy to live in apartments. So I think we're going to find that the market itself has changed. And so it may not be quite correct to say that there's this huge influx. Thank you.
All right, thank you so much, sir. Yeah, so back to Mr. Dolapo now. We're seeing land prices hit 3 million per square meter in these locations. That's about $2,000 per square meter in these locations. How would you say that has impacted the demand or affected the demand for these properties?
It's an indirect location. Actually, no location. It's an indirect relationship, rather. I mean, if a developer is buying land that is twice the price that it was 2 years ago, that's definitely going to impact the price that they're going to choose to sell their units at right now. And if everybody's buying the land prices, buying land or purchasing land at double the price that they did in previous years, then I think you can expect that across board, we're going to see some price increase. I mean, I will say that in Ikoyi and Victoria Island and even Eko Atlantic, Banana Island too, sorry. So the places where you can find ultra luxury property, there is a bit of there's a strong correlation between land prices and USD. So once there's a devaluation, a lot of the developers choose to, or a lot of landowners also choose to say, well, as long as you give me $1,000 per square meter or $1,500 per square meter, I'll be fine. And if you see what $1,000 per square meter now is 1.6 million naira per square meter. That used to be 600K. I remember at the end of COVID, when people were saying land prices are going for 600K, 700K, everybody was going crazy. But I mean, that's history now because the prices have gone through the roof. I mean, one thing I can say about land prices, especially in the ultra luxury space, is that because those costs are so high, we find that a lot of people working in the luxury and ultra luxury space tend to do joint ventures. So even though there is going to be a cost of the land, it's not a cash payment necessarily. Now, joint venture structures do change. It's on a case-by-case basis, and there's no one plain vanilla way to conduct them. But at the very least, you are not having to shell out a fresh couple billion to buy the land when you're going to have to shell out extra for the construction. So that's how I guess some of those dynamics are also playing.
If you don't mind, well, I just want to add to what Dolapo said, because I think the another way that can affect is when someone wakes up to find that his house is now worth $3 billion, 3 billion naira. I mean, if somebody wakes up in Banana Island, he's living on 1,000 square meters and his house is now worth 3 billion naira, he may be looking at, what do I need all this space for? And I think that is what Leah was saying, that people may now be thinking of lifestyle changes to move from living in such a big house and then living in an apartment where all the services and so on are taken care of.
Thank you so much for that clarification. I was going to ask Joanna the next question, but I think she's not on the call. Yeah, she's back. Welcome back, Joanna. So this question is for you. In your experience, what do you think HNIs, all the segments, all these people we mentioned, the HNIs, institutional investors, and users basically look for when they're trying to buy ultra luxury real estate? Hello, are you there?
Hello?
Hello, I think I can hear you now.
Hi, sorry, I lost you there. Is that a question for me?
Yes.
Okay. Well, yes. So I think another shift we're seeing, apart from the obvious location, quality of build, we are seeing a shift from people being concerned about sustainability primarily in office spaces. We're now seeing that move into the residential space as well, especially with the younger HNIs who are more environmentally conscious and want to be more sustainable and have a smaller footprint. So for example, one of our developments, hello?
Yeah, I can hear you.
Okay. For example, one of our developments, Louisville in Eco Atlantic, recently was given a dual EDGE certification by the IFC for being a leader in sustainability. And before, typically we would see these certifications going more for the office space. So we can see that in the residential space as well, people are being more sustainable. And then of course, apart from that, we have, technology, we have a Google AI apartment fully in one of our Echo Pearl towers. And it's just the small attention to detail, but in the technological sense. For example, post-COVID, we're seeing touchless exits where you just swipe your hand across and the door opens. It's something really small, but these small attention to details, I think, really captivate buyers, especially when there is such a competitive supply. these minute changes and innovations, I think, really capture the buyer's attention.
All right,
Don't
thank you.
I'll quickly drop in. I think definitely the points that Joanna mentioned are correct. Some of the stuff that we've seen on our side when we do surveys and work on reports for people who are looking to develop is that the buyers are really, really particular about facility management and property management. Now, there is a general notion, and yeah, it's not even a notion, it's the truth. We don't have the best maintenance culture. So a lot of these assets do deteriorate faster than they should. So if I'm going to be spending $1 million, I would really prefer if we can be sure that it's going to be managed by someone that can at least hold the value of the assets for as long as possible. Unfortunately, luxury apartments in terms of resale don't always do so well. So if I bought $1 million, I don't want to have to give examples, but if you think about some of the luxury properties that were completed, say in 2013 or 2014, previous decade, they sold for $1 million. So the likes of Tango Tower, etc. If I try and sell Tango Tower, or sorry, let me not use any specific, but if I try and sell a similar property today, am I going to get $1 million? That's the question, especially if you have all these other brand new properties coming on. So the resale value of these properties, especially because the devaluation is happening so fast and they're priced in dollars is a concern. So at the back of my mind, making sure I can get a facility manager or something that can keep the asset value or maintain it, do all those things is very, 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 very important. Alongside all the other things like big sizes, etc.
So if you mind, I think if we can also ask go back to Leah and in terms of the the profile of the HNI or the person who's going to buy these flats. And also I would assume they have other competing places to put their money. Surely. What would you say to that?
Okay, thanks. Thanks for that, Joanna and Dolapo. Dolapo, thanks for bringing up the element of facilities management. Super key, super important. You can't be building $1 million apartments and have them managed and not be able to manage them properly so they don't sustain the value. So thank you for just bringing that up. Yeah, in responding to your question, Dipo, the fact is, real estate is an investment asset class. It's not a birthright that you have to invest in real estate. It's an asset class. And for HNIs, they're competing with different products, whether they're fixed income products, whether they're equities, etc. So I'll kind of just touch into some things that have happened over the last few years, which I think have spurred on a lot of the supply that we see today. And that's centered around capital. And Dipo, you talked about 2010, a year after the world ended with the banking collapse of the banks. So in 2009, 2010, the banks in Nigeria started to really struggle when a lot of the foreign institutional investors started pulling their funds out, etc. Now that led to a squeeze on the capital in the local banks, which meant that there was simply no project finance going into real estate projects. Now, we understand that this is an effect of a lack of liquidity or lack of capital to invest in real estate. Now, if you look at, I'll do a correlation between where a lot of the capital has been going and what typically the competition looks like. So between Q1 2019 and Q1 2020, the annual interest rate, we track it based on 90 days anyways for treasury bills. The annual interest rate for a 90-day treasury bill in Nigeria moved from 12% to 2% over a 12-month period. With such a huge drop, there was naturally going to be a movement of capital from fixed income to real estate. So if you imagine that between 2019 and 2020, there's this huge amount of capital that's going to be moving from fixed income looking for a new home. A lot of that capital moved into real estate. And this is going to explain why there's been such a huge surge in supply over the last few years. So if you imagine each project takes about 24 months from concept to planning to completion, then kind of just look at those numbers and you give a sense of why we have such a huge supply pipeline. So at the Q1 2019, Trollope had data on over 7,000 housing units in Ikoyi alone, of which circa 1,120 units were in the pipeline. So these are units that are under construction or pre-construction. Today, that number has increased to over 9,000 units, with circa 2,500 of those in the pipeline. And don't forget, I'm talking about Ikoyi alone. As incredible as that may sound, it's also important to note that the occupancy rates across the prime residential markets is an all-time high, as Dolapo said earlier, circa 97, 98%, which kind of suggests that there's an incredible demand for prime residential property. However, today, those 90-day Treasury bill interest rates that I mentioned earlier have gone from 2.5% in Q2 2023 to 16.3% in Q2 2024. As a result, we expect to see a lot of that private capital moving away from real estate and finding a home in fixed income products. So essentially, for all the supply that we're expecting, because that capital is not likely going to be available over the next few years, we don't expect there to be new projects starting. So essentially, we should see a slowdown in construction projects from Q1 2025 as that capital begins to move from real estate to fixed income products. So that essentially tells us that as much as we have this huge surge in supply coming, we don't expect it to be sustainable over the next few years. So fast forward 2027, we expect things to slow down. So we need to kind of assess what's coming, what's going to be delivered over the next few years, and kind of make sure we get it right in the next few years, because I don't expect to see the same level of the same supply pipeline that we're seeing today. I don't expect to see it post 2027. Thank you.
All right, thank you so much, Mr. Leia. I was even going to ask you to paint a picture of the prime residential markets in the next 3 years, but you've given us an idea of what it's going to look like. Thank you so much. So we'll go to the Q&A now. We'll answer a few questions from the audience. So I have the first one here. The first question will go to Mr. Let's do Mr. Dolapo. Would it be appropriate to impose additional taxes on luxury and ultra-luxury developers to fund social housing government projects in Lagos? Although that's not what we're speaking about today, but Mr. Dolapo can just drop on it on this.
Yeah, sure. Look, I can try and answer that. I mean, in other countries, there are mandatory requirements for developers to either incorporate, if they're building X amount of units, they need to make sure they are incorporating X amount of properties that can be priced or can be made available at social housing level. I think in the UK, it's called the Section 106 agreement. So there are things like that that are also in other markets. But I think, yeah, it's a case of enforcement. Even if Nigeria is not a country that has that is lacking in laws, actually, we have quite a lot of good laws and some good regulation. I mean, barring many of the other big things, I'm not praising anything, but the issue is the enforcement. So it is something that is that happens in other more developed markets. But if I'm curious to see how it might be implemented in the Nigerian space, if it was to be.
All right, thank you so much. The next question will be answered by Joanna.
Okay, after Joanna, please, I would like to chime in on that.
All right,
on this.
all right. How has the industry helped to allay fears due to building collapse even in the eyebrow Ikoyi?
That's a good question. I think it actually, again, connects very well to what Dolapo just said. We have a lot of laws in place that are supposed to safeguard building collapses, but where we fall short is the enforcement, which is just not up to scratch. At Eco Atlantic, we have strict building regulations, and we have an entire team that work with all of our developers at each stage to ensure construction is being done to the highest standard and life is being safeguarded. Apart from that, when the building did collapse in Ikoyi, we actually lent some of our workers and some of our resources to help in the rescue mission. And I think just as a community and as an industry, that is one way that we can have each other's back. But apart from that, unless the government is able to enforce the laws that are already in place, I don't see any improvement in building collapses across the country, unfortunately. And the fact that it happened in a highbrow area and we're still not seeing that enforcement, and those responsible aren't really facing the book, I don't see any real incentives for others to change the way they're operating in that space, unfortunately. However, I can say in Eco Atlantic, we are taking every measure to make sure that nothing like that happens here.
All right, thank you, Mr. Dolapo. You can chime in.
Perfect. Yeah, no, I completely agree. It's really an enforcement thing. If we look at the existing building collapse, we can definitely, collapses that have happened, we can see the lapses or the places where there have been gaps in, okay, you dropped the ball here at multiple stages. So it's easy to identify where the issue is. One of the ways I'll say buyers and developers are responding though, buyers are a lot more intentional, especially in the prime space, luxury, ultra luxury, a lot more intentional about the type of contractor that they're going to buy, that their developer is using. So if I'm buying an ultra luxury project, they want to say, okay, who's that contractor? Is it an LLAN? Is it an ITB? Is it a Kappa? And the list goes on. Of course, if you're, depending on the price points, the contractor will change. But especially when you're working in the ultra luxury space, people don't want to hear that, oh, and we're doing the construction internally, especially if you don't have a track record of doing that type of work. On the other hand as well, one thing that, in fact, we had engaged some of our clients who are developing luxury properties. Okay, if you want to be different in a high supply environment, just make sure at the very base, even if you're a new entrant, just make sure you're using a good contractor. At least that would give you the semblance of, yeah, strength and, okay, these people are ready to do business. But that's not that different anymore. Because if you go on the backstretch in Ikoyi, for example, you see that LLAN is on a ton of projects. They are very, very busy. Kappa is busy, ITB is busy. So a lot of the new players alongside the old players are also using the very best contractors, which is why the space that we're entering now is really, really unique. Because even when we had large supply dumps back in previous times, there would still be the select few projects. So in this time, all these things are under construction now, but Ultimate Apartments, CEOs, Kappa that's doing it, that's going to be a really good superstar. Right now, LLAN is across the board, ITB, Kappa on all the projects. So it's, yeah, at least just to go back to the question, the developers are, developers with track record and new entrants are looking to piggyback on the strength of contractors that have track record. And the buyers are also now a lot more intentional about, okay, who's building for you? You're telling me all these sexy dreams, these beautiful things, you've shown me this stuff. Who's going to execute this project? And is it going to give me the comfort that they have the strength to execute to high quality? That's one of the things that we've definitely seen.
Okay. I wanted to just add to that because I think it's super key. There's a measure that I use, right, which is around integrity and track record. So for any developer that we would want to engage with, the question is, are they bigger than the project? Right. So that's a simple question. So if something were to go wrong with this project, right, is their reputation worth risking over this single project? So when you find people that have been in the industry for 10 years, 15 years, 20 years, there's no way they're going to risk their reputation on a single project. Now, someone that's been in the industry for done a couple of projects and they want to go big or go home, you know, if things don't go to plan, it's like we can just rebrand, change our names. You know, we didn't really have an impact in the industry as such. So I think it's important to note when you're dealing with the ultra luxury market, you have to understand who the developer is, what their track record is, and the integrity behind them. Are they bigger than the project itself? So that's a measure that we sort of use, and I think it's important for people to be able to separate who plays in the ultra luxury, who plays in the mid luxury, etc. So begin to understand that you have to work your way up, and it takes time. You can't just it should be a lot more difficult to come into the market and compete with people who have built a reputation over a long period of time.
Thank you so much, everyone. This has been really, really, really insightful. And I'm sorry we cannot take any other questions. We're already out of time. But I really, really appreciate everybody's participation. And like I said earlier, when we started this is the first edition of this webinar on high-end real estate, especially in Lagos. And subsequently, we'll have something else for you guys where you'll be able to ask these other questions and learn from this panel. Like, this is going to be like a really, really, really beautiful time to get to know all these things, identify opportunities, demand drivers, supply, all these things. Thank you so much. So we appreciate our panelists, we appreciate the attendees, and we're going to be closing this soon. And we also appreciate Real House Communications, the publishers of Castles, and Eyebrow for bringing this webinar to everybody. Thank you guys for everything. And all right. Bye, 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 bye.
Thank you very much. Bye.
Bye.
Thanks, everyone. Thank you.